Today's big financial news, the Federal Reserve wrapped up a two-day meeting by raising a key interest rate by 1/4 percentage point. From the White House, CBS's Nancy Cordes reports today's rate hike comes amid growing concerns about the economy, from recent bank failures to the debt limit fight right here in Washington.
It's possible that we will have what I hope would be a mild recession.
Today's move by the Federal Reserve pushed interest rates to their highest point since 2007, and the Fed may not be done yet.
A decision on a pause was not made today.
It's a high-stakes decision because the rising cost of borrowing money has already contributed to the failure of 3 major banks in the past 2 months. It has also driven down home sales by nearly 20%. Emily Boyko has been house hunting in Minnesota for 6 months.
I don't think anyone's ever prepared to pay more, but it's unfortunately our society.
And yet the inflation those rate hikes were meant to tame remains stubbornly high, down from last year's peak of 9%, but still far from the goal of 2%.
It's now clear that the Fed was late in starting its rate hike campaign. And because they were late, they had to increase by much more than the normal pattern of Fed increases.
Now, some economists are warning that raising rates again could push the U.S. economy into a recession. In a letter to the Fed chair this week, 10 congressional Democrats, led by Senator Elizabeth Warren, urged him to change course. The current strategy, they warned, has the potential to throw millions of Americans out of work.
The Federal Reserve raised interest rates yet again. We're at the highest rate we've been at since 2007. And for some of you that aren't paying attention, that's 16 years. That's how high the interest rates are right now, which means everything from buying a house to buying a car are going to be much more expensive for the average homeowner. So what does that mean to you? I get in and start looking at some deals. Right now, there's going to be some sellers really anxious because their pool of available buyers are shrinking as we speak. When interest rates go up, the pool of available buyers goes down. It's a natural law of economics. Mortgages are going to be more expensive, which means these homeowners who have been sitting on these homes hoping to sell them are now going to have a smaller pool of available buyers, especially if you're looking at homes in the $500,000, $700,000, $800,000 range, because there's fewer buyers for those homes. A year ago, if you were getting a $600,000, $700,000 mortgage, you were getting 1%. Now, 5 times that. Now it's 5 times that rate, which means people are going to begin pulling back, which is your opportunity to get in there and start cutting deals and making disrespectful offers to these homeowners. You're asked, hey, Barry, what the hell is a disrespectful offer? Watch this video right here where I explain what a disrespectful offer is. And you need to be making as many of those as you possibly can. Talk to you soon. Good hunting out there.